Hello, and welcome to the Wade Borth podcast. I'm your host, Wade Borth, and in every episode, my goal is to get you to think differently about how money works and ultimately to empower you to take control of your money and your personal financing system. Hello, welcome back to the Wade Borth podcast. Today, I'm going to be talking about a question I get quite a bit. And the question is, should I take a policy out of my child? Or some people think that's the first place that they want to start. So I want to bring a little bit of clarity to that conversation today. And so again, welcome. And if it's the first time, welcome to our podcast, the Wade Borth podcast. If you've listened to us before, welcome back. We've always appreciated the longtime listeners and multiple listeners that listen to a lot of our different podcasts. So I would ask that you just share with other people like this podcast and give it a rating. It is vitally important that we get a message out. And the only way we can do that is through all those people that are listening, and they share this and they share the content. So I think it's important. Again, for those that have listened to other podcasts, I appreciate you. For those that maybe this is your first podcast, welcome. And thank you for taking the time to listen. So we try to keep this light and entertaining and quick, but also very informative. So again, welcome back to the Wade Borth podcast. The question we're going to be talking about again is, should I take a policy out on my child? And what does that mean? Well, I think it's important to understand that life insurance policies belong on everybody, in my opinion. Anybody that can get insurance should get insurance. And I'm going to start with, should I take a policy out on my child? And the answer is yes. Why wouldn't you want to? And in the idea of this becoming your own banker, the infinite banking concept, everybody wants to go there and get a policy on the child. And I'm like, I agree, get a policy on your child, but do it for a number of different reasons. The one that I think most people don't get until they get it, I know it sounds a little weird, is that it is a great tool to teach our young people how to respect our money. I heard Warren Buffett talk about this, is like putting our money to work and getting what we expect back out of it. And so that is really the context of why you want to have a policy on your child. The other one is guaranteed insurability really for the death benefit. It doesn't happen statistically. It's a very small percentage that younger people or younger adults will pass away early outside of the realm, but it does happen. And so that death benefit is vitally important. But more importantly that's because most people, if you have a child that passes away, and I've known people that have had children pass away way too young, and it is devastating on the family. It is absolutely devastating on the family. And so what happens is mom and dad, especially if you're running a small business, your own business, you are out of production because that's so cold, but you are unable, it's very difficult to continue to run your business while you're trying to grieve and bring your family back together after a loss. And so what happens is that if you're a sole proprietor, if you're running a small business, that business is going to suffer, but the bills don't stop. The needs and the desires of the family aren't going to stop. So those things have to continue to be paid for. So how are you going to pay for them? I know it's a cold way to look at it, but it's truly the way life insurance design is, that it gives you that opportunity to breathe and to mourn, especially at younger children, because it can take years before parents can get over the loss of a young adult or a young child or a teenager, whatever it might be. There's just, when people get to be 80, the expectation is that they're going to graduate from this world fairly quick. When they're 18, there isn't that expectation. There's a whole life set out ahead of them. And so what happens, at least in my observation, has been when that happens, people grieve for a lot longer because they grieve not just the loss of that person, but the future, what that person could have, the kids and your grandkids and so on and so forth. There's just a lot of things that go into it. So there is a definite need for death benefit on children. And when we look at it from an IBC concept, is like getting kids started, having their own policy is like, it's easier to teach somebody when they have a policy with their name on it. They're going to go, oh, that's mine. I respect it more. And so they're going to want to learn how to use it. They're going to want to learn how to implement these ideas that we talked about in all the previous podcasts. Like, I want to take advantage of wealth creation. What better time to teach kids than as early as possible? When you have the most influence on somebody's between ages 7 and 15, because their cognitive abilities are there to learn. And 13, 14, 15 is where they're actually listening to the parents, even though maybe we think they don't, right? So we all kind of go through that as parents. But the point is, that's when we have the greatest influence. That's when before all the outside influences really start to impact our children. So it's a great opportunity. So it's important from an IBC concept that we get this idea instilled into our children. And the best way to do it is have something with their name on it. Says, this is where we store our dollars. This is where we store our safe, secure capital, because it will be the foundation that we use to expand on all kinds of different things and all kinds of different conversations. If it's investing in college, or if it's investing in a business, real estate, whatever it might be that we want to teach our children, this is a spot where it starts. Where do we store our capital? How good of an environment is it really? And then saying all my free capital should go. That's really the habits we want to teach our kids. And the earlier we start, the better. So it is important to have policies on children, but quite frankly, it's important to have it there. But from a performance standpoint, it's not nearly as good as maybe if we had the policy on the parents. It's probably just more important to have the policy on the parents from an insurability standpoint, from a death benefit standpoint, because their likelihood of dying and their impact if they die, and the family's ability to pay the bills and pay the premiums is by the person that's actually earning the wages in the family or earning the income in the family. So it's important. So just let me put it this way. It's important from the standpoint of teaching good habits. From the death benefit is definitely important, although likely or not, rarely it's going to happen or have to pay a claim out. But one of the most important things that we kind of miss is guaranteed insurability. When a child is young, they haven't had exposure to a lot of things in life, a lot of bad habits, a lot of bad environment, a lot of bad choices. So there's a lot of things that, let's get policies on children where they're young. They're still insurable. They're healthy for the most part. Hopefully they are. And once the policy is in place, that's never going to change. So take advantage and get as much as you possibly can on a child at the youngest possible age, because there's no better opportunity, no better time to do it than right now and immediately, as young as possible. So it's important to get as much coverage as the insurance company will give you, will allow you to have, because it's not unlimited how much they'll allow. Typically, it's up to $1 million of death benefit, or a certain percentage of what mom and dad have in coverage. So it's important to get as much as possible that the insurance company will allow that to be underwritten, to be issued on that individual, for the insurability's sake, for the teaching purposes, and also for the death benefit purposes. And then once we have that warehouse set up to hold cash and hold income or hold money, then we can start really teaching them how to use this idea called infinite banking, and where we have our safe, secure, certain storage of money. That's the real importance. That's the real value of having a policy on a child. And I know some people think, oh, that's morbid. Well, it's not morbid. It's just that's what we want to perceive, is because we can't imagine something bad happening to our children. We also know that it's life, and life will happen. And so let's take a look and say, how important is it for me to have a policy on my child? Are we planning in the future? Are we being intentional about their future? And what are we doing to plan for that? Again, I get a lot of questions. Should I take policies out of my children? Absolutely. Absolutely should have policies on your children for those reasons we spoke about before. Because it is important that we have a plan saying, okay, I need to have a policy on my child for these reasons, right? For the insurability purpose, for the death benefit in the event that they die early, which is, again, not real likely, but it's catastrophic when it does. And third, so we can start teaching them as early as possible that this policy that I have on my son is where we go to get our dollars to pay for your college, or do whatever we're going to do to advance his life and to create wealth in his life. Now, the next follow-up question is, when should I turn that policy over to my child? And I can say my views on this have changed a little bit, probably as I've gotten older, and maybe as my son has gotten older and close to that age. I'm looking at this as like, we think about this from a family banking perspective. I figured I've paid for this policy. I've put it in force. We've used it a number of different times. Why should I give it to my child? Why not just keep it in the family banking? Let him go purchase his own policy as quickly as he can. So I'm not going to go ahead and gift something to somebody. I'm going to say, let's keep it in the family, knowing that we have the coverage there, and let's have our children. And again, it's probably a little bit easier for me. I have one child, so it's not like there's multiple children in a family. So we'll just keep it in the family. And when my wife and I both pass away, he's the contingent owner now. He's over 18. He'll be the contingent owner. And so he'll end up ownership of the policy when that happens. But while I'm alive, it's still going to stay in the family, and it's still going to be used for the family banking practice. But it's part of my ownership of policies. and we're going to teach him to start his own ownership of his own policies. And so it probably seems small, but it's like thought process of an 18-year-old, although maybe very strong, and we've worked really hard to instill good values. It's still, they're 18. I think back when I was 18, I wouldn't want to have somebody say, oh, here's a policy and here's $50,000 of cash value in policy. And then really it's like giving somebody a tank with no instruction manual. Just by learning how to drive it, you're going to destroy a lot of stuff. I guess I would just back up and say, let's be good stewards of those dollars. Let's put our children in a good position to make good decisions too. Let's work side by side with them and say, hey, let's talk to this, how this works. And it gets to a point maybe where they say, I get it, and they've shown that they understand it and they get it. Then feel free to, by all means, gift that policy to your children. But to what benefit? Why are we doing that? Wouldn't we be better served if we say, hey, Josh, or hey, Johnny, or Mary, or Sue, or whatever it is, let's have you get your own policy, and let's have you start funding that as well with your dollars. I'll continue to fund this one. You go ahead and get yours. You start funding yours. Again, we still use it as this interdependence, this idea of interdependence within our family, from a family banking perspective. We're still going to be able to use them all, but I'm still the one that's going to control it, or Lynette and I are going to be the ones who are still controlling it, versus giving it to him and then all of a sudden something happens and we have no control of those dollars. And so we want to make sure that mature policy, because it's a great policy, stays within our family banking system. We have that interdependence within our family. So I'm going to support my son and what his endeavors are by the use of that policy, but also we're going to be setting down the ground rules. It's like, hey, we're going to show you how to treat this thing correctly. And so we take a loan, we pay it back, we have a structure, all those kind of conversations. You want to go to college? Great. Let us help you fund college by borrowing against that policy and having a plan to pay it back. So those are the things that we want to have a conversation around. We want to be able to talk about with him. So it's the idea of teaching. Then that's the tool of teaching him, but it doesn't necessarily mean that we're going to give it back or give it to him when he turns 18 or 25 or whatever the number is. We're going to encourage him to go get his own series of policies so he can add to the family banking system. So hopefully that's helpful. Hopefully you understand. And if you have questions, I'd love to have a deeper conversation about this, because this is vitally important. That some people don't consider this to be important enough to spend a lot of time on, but it is really important, because that's really the future. If we think about why we're doing what we're doing, we're doing it for us, the current generation, but more importantly, most people that buy life insurance and want to set up a family banking system, a lot of times it's because they want to help the next generation not have to go through the pain that they went through to understand where they need to be. And that's really the conversation we need to have. Get them started early, show them how to take control of this on an early basis so they don't have to wait till they're 35 or 40 years old. And they can't go back and say, gosh, I wish I'd known about this when I was 18 or 20. We're telling them now, we put the things in place, and maybe they're not ready to hear it yet. That's fine. But when they are, at least the things are in place for them to say, oh, I get it now. Let's take the same and move it forward. That's why it's important that you retain ownership, because, again, not everybody is ready for this all at once. Think about when you were at 18, were you ready to hear this message? Maybe not, but let's give them the opportunity to take advantage of it. So having policies on children for those things we talked about before, and then you as the owner, especially as the parent, retain ownership of that so you can have it part of your family banking structure to help support your children. And then when they get to the point where they're old enough, let's get them a policy on their own. So we have a series of policies throughout their lifetime. That's what Nelson talks about in his book. We have to have a series of policies throughout our lifetime. And if you haven't read Becoming Your Own Banker by R. Nelson Nash, I'd encourage you to do that. We got some podcasts on sagewellstrategy.com where we break down each chapter of that book, because it's so vital to understand what's going on and how we think, because it's a great idea, right? It's a great idea how we can take control of the banking function of our lives. And this has to be done at the you and me level, or in our case, in the conversation around the context of this conversation, around me and my son's case, right? So that's the banking concept right there. It's done at the father-son case, or the mother-daughter, mother-son level, not at the Wells Fargo and then our son. We don't want to turn him over to Wells Fargo. Quite frankly, we want to stay away from Wells Fargo, come to the family bank to finance what you need. So hopefully this is helpful. I would appreciate any comments. If you want to reach out to us, Wade at Sagewell Strategy, drop me an email. Let's have a conversation, because, again, Policies on kids are vital. And we might have a series of policies on kids before they turn 18. And that's a possibility as well. You might start to say, hey, I'm going to take one out today. 5-10 years from now, we have a second wave where we take out the second series of policies. I've seen that multiple times as well. And we're living examples of that. Give us a call. Check out our website. Whatever medium you're listening to this, I would just ask that you give us a like and a thumbs up. Share it with other people, because the message of being in control of your banking function of your life is so important, and it's what gets me excited. I mean, I see this as our mission, is that we need to find more freedom, not less. We need to find more certainty, not less, in our lives. And when we find that, when we get that, we'll know what true freedom feels like, when we have that certainty, when we have that control. Because now we're the ones that are in driver's seat. We're not being dictated by other people. So again, thank you so much for taking the time, and we'll talk to you soon. If you're enjoying this podcast or know anyone else that might be interested, please be sure to hit the subscribe button, and please leave a review. This will help this podcast reach and help more people by ranking higher in searches, and ultimately help more people get out of financial bondage. And don't be afraid to share this podcast with your friends and family, as we can be easily found on Apple Podcasts and Spotify.